Ladies and gentlemen, welcome back to the channel. I hope you guys are having a fantastic day and you are ready to talk about AMC stock and a potential price prediction by the end of this week. Ladies and gentlemen, things are about to get spicy out there in the markets. Fed Jerome Powell incoming on Wednesday and Thursday, as well as PCE data. Lots of real estate data, as well as some Fed data and the bank stress test. There's a bunch that could affect our markets. Keep in mind, this is the week of the court date for AMC stock. So let's get into it. Hopefully you find this value entertaining and educational. If you do, hit the like button and subscribe to the channel. If you want to come trade with us live in real time, join a community. I believe over 80 members now. Link down below in the description of this video. So, okay. First things first. AMC stock looks very good. It looks so bad it looks good. And that's typically how these things tend to work. When everyone is so negative, you usually want to be positive. I reference technology stocks a lot when I make this analogy or break this down. Everyone was negative on technology heading into 2023. Everyone thought there was going to be a negative first half of the year and a positive second half of 2023. That was the narrative in December of 2022. What happened? Technology was the best area to be investing in. The first half of 2023 was one of the best first halves you have ever seen in the history of the stock market. So the second half, probably not going to be as good. Who knows, right? That narrative of if you took the opposite to the consensus view paid off in 2023. And it likely will pay off, with AMC. Things are so negative, they're bullish. The RSI being very negative, that's bullish. Typically, AMC tends to bounce when the RSI is oversold. Every time you have bought an AMC when the RSI has been oversold and just held it for a couple of weeks, you have made a lot of money. 50, 100% plus, pretty typical with AMC. So that's one thing. The other thing is this arbitrage trade. Now, the courts are going to rule on this coming, I believe, Thursday on June 29th. You're expecting the reverse split to go through. The special mastery just said, basically the recommendation is that the judge approve this to go through. So, for those reasons, the markets already expect this to happen. It's already been priced into AMC. And that's why you've really gotten, since May, now almost 2 months, just a almost straight down move in AMC. Pretty consecutively going down. So that is pricing this in. So what is going to happen after Thursday is hedge funds and institutions that have been playing this arbitrage trade, they're likely to say, hey, we were playing this arbitrage trade, it worked out, the stock fell, let's go ahead and cover on some of those short positions, if not the whole entire short position. It's this narrative of sell the rumor, buy the news. Typically, it's buy the rumor, sell the news, like pharmaceutical companies or a conference like AMD's recent AI conference. You wanted very much to buy that rumor and to sell the actual news or sell the actual event. The stock's fallen almost every day since then. This is the opposite effect. You sell the rumor and you buy the news, essentially. So this whole ordeal could come to an end by Thursday. That means Friday could actually be a pretty bullish day. Next week could be even more bullish. Now, I expect the rally to actually kick into full steam ahead when the reverse split actually happens. It's unclear if that could happen on Friday or next week. I'm sure we would get some bit of announcement beforehand. So I imagine it would happen next week. But it's possible that it did happen on Friday as well if the judge ruled that could be proceeded with. AMC is obviously trying to do this as quickly as possible. So those are some of the key things that I'm kind of looking at right now that I'm kind of keeping on my radar. And I think you should also keep on your radar as well. Not to mention, Intera Capital just sold another $2 million worth of, or 2 million shares of a. They've been doing this. This is pretty bullish, or at least on face value, it looks pretty bullish. Them selling out heading into this big event. Now, after the reverse split, I think some people are confused on this. I expect a rally after the reverse split for the obvious reasons I just went over. But something else that I think people forget is if the float is smaller of AMC, then it's going to be easier for the stock to move, for volume and dollars coming into AMC to move the stock around. Take GME for an example, right? I like to use this analogy because it's in the same, right, category as AMC, a quote-unquote meme stock, a potential short squeeze trade, big running, potential big runner. GME's float is a lot smaller, so the stock moves more. And that's the same boat that AMC is going to be in as well. So, just more dollars heading into AMC is going to affect the stock a lot more than it does now, being that the float is over 500 million shares. Now let's take a look at the face value of the Ortex data, and then let's go ahead and dive into the economic calendar, because you're going to hear from, again, Fed Jerome Powell twice. You're going to get some PCE data. You're going to get a lot of bond auctions, things of that nature that could affect our markets. Now, the dollar amount currently sold short in AMC sits at $515.53 million. Estimated short interest of free float at 23.94%. Free float out on loan at 38.5%. Shares out on loan almost 200 million. Days to cover 8.83. Cost to borrow 135.44%. And you are also looking at 100% share utilization. So that's kind of 3-year-olds. What can I say? That's kind of the data that we're looking at right now. Now, cost to borrow fees have also been rocketing higher recently. Cost to borrow average at 361%. Cost to borrow max 385%. Cost to borrow minimum is 0.35%. The live short interest of free float sitting at 24%, 124 million shares that are currently sold short. AMC stock is on the threshold securities list as well, which basically puts hedge funds, institutions, and market makers on notice to say, hey, you have positions that need closed out of, get on it. And that's probably what we're going to see happen. Now, it's no surprise we have a lot of failure to delivers that AMC is on the threshold securities list, considering the option activity has been very negative. You have seen 65 orders on Friday alone worth almost $27 million with a positive order value of 2%. Very negative. Very, very negative. Wah, wah, wah. And that's what's really been pushing down AMC as of recently. I don't think it's been a lot of actual shorting, as the short interest really hasn't moved around all too much. It went up to about 25%. It sits at about 24%. I mean, you haven't seen a lot of shorting activity, the legal shorts at least. It's all been in the option activity. And again, this is kind of what is showing you that everyone is so negative on AMC. Besides just the share price going down, the positive order value was 2% on Friday. Meaning, if you put $100 into AMC options, $2 were bullish and $98 was bearish. Virtually no bullish option activity on $27 million worth of options. That's bad. I don't want to be bearish on AMC with those kind of numbers. I want to be bullish, because if you're the 2% there, you're going to get paid out big time. Nobody's expecting the stock to go higher. So if that's what happens, it can pay out quite nicely. Now, on the other hand, you have a lack of option activity from really this week over the next 3 weeks. So for this Friday, you have about 7,000 calls currently in the money, 95,000 calls out the money, 34,000 puts in the money, and 68,000 puts that are out the money. Pretty low option activity compared to what we've seen recently. July 7th option expiration has about 2,400 calls currently in the money and 47,000 calls out the money. 11,500 puts in the money and 15,000 puts that are out the money. July 14th has 703 calls in the money and 14,000 calls that are out the money. In the money puts sits at about 14,000, out the money puts at 9,600. So very low option activity overall for the next 3 weeks or so. And that means that if you get options flowing into AMC, whether they are calls or puts, they could have a bigger outsized effect on AMC. And that's something to also consider heading into this upcoming week. Now, let's briefly run through the economic calendar. If you guys want to keep this on your computer or on your phone, I keep it on both in case I'm out and about and the markets start to move all wonky. Then I can look on the phone or I can look on the computer and look to see what's going on. Again, it's trading economics. I'm not sponsored by this. I'm not paid for saying this in any way, shape, or form. And matter of fact, I've never took a sponsor on this channel. And we're offered a lot of sponsors, but a lot of them are shady. They want to pay you a lot of money and promote something that is fraudulent. No way ever would we do that. Just wanted to put that out there because I've never mentioned sponsors and we've never had them. But if you do want to get yourself free stock with Webull down below in the description of this video, I mean, that is, I guess, an affiliate, and that does give me a free stock. It gives you multiple free shares for literally depositing $1. If you haven't done it already, just do it. It's free money, okay? You literally can't lose. You could get a free share at Google or, Apple or whatever. Sometimes you get good stocks. Now, if we take a look at Monday, you don't have much. Monday's the slowest day, as it typically is. You have a 3-month, 6-month, and a 2-year bond auction. Keep in mind the TGA account, the Treasury General account, was ran down to about $30 billion during this whole debt ceiling crisis, meaning we almost ran out of money in the Treasury General account. That's where the debt ceiling default would have essentially happened. Well, the Treasury now has plans to raise over $1 trillion, up to $1.5 trillion by selling bonds by the end of this year to fund the government, to fund these initiatives that they have been putting out there that they want to do, and these bills that have been passed over the past 2 years or so. That means that money's going to flow out the markets this week, out the bond market, out mutual funds, out of everywhere, essentially. And these bond auctions are pretty big, so keep that in mind. Those bond auctions come out at 11:30 in the morning, right as the European markets close. So tomorrow's European close at 11:30 Eastern time is going to be very volatile, at least from what I expect. Now, Tuesday, durable goods orders month over month. You're expecting negative 0.9%. Last month's reading was positive 1.1%, so you're expecting a deceleration in the economy. As far as housing data, you're expecting housing data to weaken after it's been looking pretty good over the past 2 months or so, starting to get out of this negative kind of era that we have been in, starting to look a little bit worse, or at least that is the expectation. Now, Richmond Fed manufacturing shipments, expected that to be positive after it was negative 13 last month. Richmond Fed manufacturing index expected to be negative 8. This thing has been negative for a long time now. It's expected to look a little bit less negative. So the Richmond Fed data is expected to be better than where it was last month. So that's something to keep on your radar. Dallas Fed Services Index expected to come in at negative 15. A little bit better than last month, but still a big problem. Now, Wednesday's data that we are going to see is number one, Fed Jerome Powell at 9:30 in the morning on Wednesday. If we get new information from Powell, that's going to move the markets. I highly doubt we will, so I don't expect too much. And then you got some bond auctions, and that's really it. Now, Wednesday at 4:30 p.m., you're going to get the bank stress test results. Now, Janet Yellen said on Friday of last week and on Thursday that you could expect more bank mergers to come. This means there might be some bank stress still out there. Some banks might not do well on that stress test, and that could affect the markets. Now, on Thursday, you're going to get initial jobless claims at 8:30 in the morning, some GDP data being finalized for Q1. And same thing for PCE and GDP sales, a bunch of different smaller data points. Not going to be a big deal for the markets. It's just finalizing the data. You might see some upward or downward revisions. Unless they're big, it's not going to be a big deal. Now, pending home sales comes in at 10 o'clock in the morning on Thursday. Year over year, you're expecting negative 17%. Last month's rating was negative 20%. So a little bit better than where we were at that peak, negative like 30% year over year for pending home sales. Pending home sales month over month are expected to decline by 0.6%. Last month's rating was 0%. So a little bit worse again for the real estate data. 3 p.m. on Thursday, you're going to get Fed Bostic that speaks, and that is going to do it. Now on Friday, it's going to be a little strange. Or did I mention Fed Jerome Powell? Yeah, Fed Jerome Powell speaks at 2:30 in the morning on Thursday. So it's going to affect futures. It's going to be a late night thing. Again, if he says new information, the markets will move. If he does not, markets will brush that off. Now, as far as Friday, that's going to be the big day. Core PC price index month over month, you're expecting that to fall to 0.3%. Last month's reading was 0.4%. Personal income, you're expecting that at 0.3%. Last month was 0.4%. Personal spending month over month, expecting that to decline as well to 0.4%. Last month's rating was 0.8%. PCE price index year over year, expecting that to come in at 4.1%. Last month's rating was 4.4%. And PC price index month over month, expecting that to come in at 0.2%. Last month's rating was 0.4%. So across the board, expecting inflation via the PCE index to fall. And you're expecting personal spending to fall. And you're expecting personal income to also fall. So overall, good for inflation, kind of bad for the economy for the data that we are getting on Friday, guys. So there is all of that. Now, anything that is unforeseen from here will affect this price prediction. And you guys are going to hate this one. My price prediction is essentially nothing. I think you could go to 450, potentially leading up until Thursday. You could kind of trade sideways from here. Now, it's possible on Thursday or on Friday you do rally. And if you rally, then you could probably make your way to the 100-day moving average, which is at $5.19 per share. But my base case, what I expect to happen is really nothing. Is a lot of sideways trading action. You could go up a lot, you could go down a lot, but I expect really not a whole lot. It's the following week. After the court proceedings are done, we get the reverse split. That's where I expect AMC could see a lot more upside pressure. Best case scenario for this week, potentially around $5.30 per share. Worst case scenario for this week is around $3.80 per share. That would be a decline of, like 5% from here, roughly, which is like nothing for AMC. Yeah, it's a decline of like 4% from here is kind of my base case or my worst case, right? The lows of this cycle that we have seen in the past 3 months. I don't expect that to happen. I do expect a bounce, but I don't expect a big bounce again until after the court proceeding. That's when you could really start to get squeezy and shorts could be in big trouble. So, ladies and gentlemen, that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.